The value of my long-term dividend growth stock portfolio just passed $130,000 for the first time. This is as the overall stock market continues its strong first half of 2023. Year to date, the S&P 500 is up 16.4%. My personal portfolio's recent gains have been fueled by massive stock price growth among some of my top holdings. Microsoft stock is up 42.14% year to date. This is my top stock, which I added heavily to in fall 2022. Broadcom stock is up 56.72%. I added this in early 2023. Apple stock is up 55.09%. Apple just became the first company to eclipse $3 trillion in market cap. This makes it the most valuable company in the world by nearly $500 billion. Another one of my favorite dividend growth stocks, Visa, is up 14.51% on the year. Collectively, these stocks now make up 44.63% of my dividend portfolio. While I enjoy these on-paper capital gains, I would actually have preferred if the stock price went down, not up. These are high-quality businesses I want to own more of for the future, so my preference would be to buy at a lower valuation. Despite the recent market gains, I have found a few stocks to continue investing new money into. This includes the addition of my 14th stock to my portfolio. More on that later. Last month, I earned over $450 in dividends. This is all reinvested, fueling my snowball effect. In this video, I'm going to share all my new stocks, break down the current portfolio, and explain why $130K is only the beginning. Let's roll the intro. My name is Zach, this is Dividend Data, and you should leave a like and subscribe if you enjoyed the video. I post these portfolio updates every single month to reflect on my investing strategy. I hope you find value and follow along. Throughout, I'll be using my stock research tool, which is available at dividenddata.com. Here you can track your investment portfolios and get custom analytics for the dividend-focused investor. On top of this, you gain access to deep financial research for over 8,000 stocks on the New York Stock Exchange, NASDAQ, and AMX. The tool shows every key financial metric displayed with detailed charts and tables as well as calculated growth rates. If the software helps you identify just one slightly better stock, then it pays for itself. Become a member at dividenddata.com. Link in the description and pinned comment. Also, I should mention that Dividend Data YouTube content is now available on Spotify. Please give it a follow and a good review to help spread the show. Now let's dive into my portfolio. The current total value is $130,187. With $98,572 invested, my total return is 32.07%. Here you can see all my stocks sorted by total value. Microsoft is my top holding with a 41.24% total return. This is followed by ExxonMobil, which has a massive 202% total return. As longtime viewers know, I bought this in the 2020 oil crash and have been raking in massive dividends and capital gains. My initial dividend yield on cost was 8.9%. This has generated over $1,500 in dividends. I reinvested all of this, giving me 21.38 shares. These are labeled DRIP shares. This has increased my dividend yield on initial cost to 10.28%. This is a 1.38% increase from reinvesting dividends. That is over a 10% annual return on my cost from dividends alone. However, all is not sunshine and rainbows. I have made many investment mistakes, some of which I no longer own, whether it was Intel, AT&T, Walgreens, or others. I have and will continue to make mistakes, but it's important to use them as a learning lesson. Currently, the largest loss in my portfolio is Disney stock, now down over 38%. I definitely overpaid for my stock position. In hindsight, I chased the stock and bought when the fundamentals had not followed. Personally, I think the stock will do well long-term from this current price. It will come down to the future profitability of streaming and the rate of decline in their cash cow cable business. Overall, I have 14 stocks in my portfolio portfolio thanks to my new stock automatic data processing, ticker symbol ADP. More on that later in the video. The diversification is heavily weighted towards technology at $58,000 of total value. This is followed by energy, consumer defensive, financial services, communication services, and the new entry, industrials. This portfolio is projected to generate $3,539 in annual dividend income. That is $884 quarterly, $294 monthly, $9.70 daily, or 40 cents hourly. This is passive income that I can take as cash or choose to reinvest. Personally, I reinvest all my dividends to optimize long-term compounding in the snowball effect. This dividend income is broken into 3-month cycles since all my stocks pay quarterly. In July, I'm projected $322, August $105, and in September $456. This income continues to grow from investing new capital, reinvesting dividends, and dividend growth among my holdings. Dividend growth is an extremely important part of that equation. For example, Kroger just increased its dividend by 11.5%. I primarily like to invest in companies who reliably increase their dividend payments on an annual basis. Since starting my portfolio, I've earned $9,237 in dividends. I received $3,297 last year and $1,724 so far in 2023. In June, I made $451.05. This includes $50 from Broadcom, $25 from PepsiCo, $101 from T. Rowe Price Group, $30 from Chevron, $143 from Exxon, $68 from Microsoft, $21 from Kroger, and $7.70 from Visa. All of these were reinvested to increase my ownership stake in the company, growing my future income, creating a dividend snowball effect. This is starting to get significant. $450 is no joke. That is being passively invested to buy more shares. For context, I purchased $1,387 of stocks last month with new capital. This includes 3 shares of automatic data processing, ticker symbol ADP. My cost per share is $214.80. This is at a 2.33% dividend yield. ADP is a dividend aristocrat stock that has seen accelerated earnings growth in recent years. Despite this performance, the stock has sold off in the last year. This makes me think it may be a good time to start a position in the company. ADP has had insane dividend growth. Over the past 10 years, the dividend CAGR is 12.59%. The most recent increase was a massive 20%. I don't expect this level moving forward, but historic growth seems sustainable. I'm planning to make a full video on ADP stock in the coming weeks, so make sure to subscribe if you want to learn more. My other buys included 15 shares of the Altria Group, ticker symbol MO. This was at a cost per share of $43.68. That is a dividend yield on cost of 8.61%. At those prices, I'll keep buying up MO stock. It offers a high yield and reliable slow growth. That growth is sustainable too. This has become my top dividend payer by a wide margin. Finally, I bought 1 share of Disney at $87.84. I've been telling myself to hold off on this until the fundamentals improve. However, this low price is very tempting and I do think it's a good value. I figured it wouldn't hurt to lower my cost basis a little. So that is my current long-term dividend growth stock portfolio. While recent performance has been good, it's important to remember that will not always be the case. For example, 2022 was a year that humbled many investors. However, I am building this portfolio for the future. It will be decades before I even consider living off my investments. My plan is to continue investing consistently, reinvest dividends, and compound portfolio value. With this perspective, you are riding the wave of economic growth. Ideally, I invest in businesses with growth accelerated above that rate. The emphasis is on time in the market, not timing the market. I must not get overly excited or depressed by short-term performance. Keep the eye on the prize. This concept is explained so well by the legendary investor Ron Barron. He predicts that the stock market will grow 35 times in the next 50 years. That is in line with the prior 50 years. However, he argues that growth may even accelerate beyond that. I'd really recommend you watch my video that I just made breaking down that claim. Link in the description and at the end of the video. This principle is vital to understand as a long-term investor. If you enjoyed the video, leave a like, subscribe, and review on Spotify. You can sign up for dividenddata.com to track your portfolio and research stocks just like me. There you will gain access to the exact tool I used throughout the video. If the software helps you identify just one slightly better stock, then it pays for itself. Thanks for watching.